What's up, YouTube? Eric here. I want to bring three top stocks, dividend stocks for 2022. These are stocks I think can do well this year and beyond. I own all three of these stocks. I like to have a little diversification in the portfolio. If you follow my growth portfolio strategy, I have what's called DGIF, Dividend Growth Investing for Fire. That's total growth stocks. So these stocks have a little bit of a dividend, but it's not a huge payout ratio. And they give you growth in that dividend plus growth on the actual share price for compounding, for accumulation. These are great stocks to have to kind of give you some balance in the portfolio. You're going to want to check this one out, guys. Stay tuned. Now, I told you this was coming, guys. I made a video back in July of 2021, right before I went to Vegas on vacation. And I said that John Deere was the Tesla of agriculture, the Tesla of farming. Now you see that term used. I've seen it a couple of times recently in headlines because big news just was announced here this last week. CES 2022, John Deere reveals a fully autonomous tractor. That is the first stock on the list, John Deere, ticker DE. Check this out. Fully autonomous tractor ready for large-scale production. The machine combines Deere's 8R tractor, TrueSet-enabled chisel plow, GPS guidance system, and advanced technologies. The autonomous tractor will be available to farmers later this year in 2022. So this is really interesting. Just real quick, the global population is expected to grow from 8 billion to nearly 10 billion people by 2050, increasing the global food demand by 50%. So this is explaining the benefits of why farmers need this technology. And this is the future, guys. So it uses 6 pairs of stereo cameras, which enables 360-degree obstacle detection and the calculation of distance. You can actually run it through an app. Using John Deere Operations Center Mobile, they can swipe from left to right to start the machine, literally start the machine. While the machine is working, the farmer can leave the field to focus on other tasks while monitoring the machine's status from their mobile device. And there's a video that actually shows a farmer literally not even in the same vicinity and having that tractor run 24/7. Now, I think more importantly, it helps with weather. You think of, if you know anything about farming, weather is a big deal. And so if you can maximize your time when the weather's good to get crops in, to get crops out, that can be really big for farmers. This John Deere Operations Mobile provides access to live video, images, data, and metrics, allows a farmer to adjust speed, depth, and more. So this is pretty detailed stuff. Now, the last video I made on John Deere, I actually tried to sing John Deere Green. So if you want to see that, go check out the last video. I'll put a link above. Go check that out. There's a deeper dive, like a 30-minute video on John Deere. This is just going to be a quick rapid fire today with 3 stock picks. So John Deere, $115 billion market cap, large cap. The P ratio right now, TTM is 21.8. Dividends, 1.12%. It hasn't met the performance metrics for the 10-year annualized performance you would want. I think this is more of an up-and-comer. And if you look at this, it's trading at the same levels right now as it was basically the start of 2021. So it hasn't really moved for basically close to a year, 11 months. And I think it's consolidating well, and it could break out. I'll show you a chart here in a second. I thought this was really good and put it in perspective. He's talking about when economic conditions improve, that shareholders win, that John Deere takes care of the shareholders with dividends and buybacks. So I think you'll see more of that. You're going to see some more buybacks, dividend increases. He's got projections here for distributions and free cash flow, and you can see the projections are quite solid. So I think this company is in a ramp-up phase. I think it's going into kind of a mega trend when you think of farmers having to replace machinery, and that trend could last for several years. So John Deere has performed well over the last few years. Before that, it kind of sat sideways. It historically trades at a lower P ratio. I think it's bound for a breakout. So really quick chart, guys. John Deere, you can see it's kind of in a bull flag. This could be a potential bull flag here. Looks like it might want to break out and go higher. I think this thing could go to $400 and get some resistance. It's trading right around $380 right now. We were buying this in Discord around $325 in that range. Over the last several months, it's kind of come down to that range and then popped $325, $330. So I think it's been consolidating nicely in a range for a while, and I think it's bound to take off higher from here. The next pick, guys, UNH, United Healthcare. This is a very large cap, $446 billion market cap. The PE ratio TTM is 29, but the forward P ratio is around 22.7 if you do the math. And this has done well. It's up 32% over the last 52 weeks. Dividend 1.22%. This actually fits really well in the DGIF category. It nails it on all 5 of the categories that we're looking for in the DGIF. Now, this stock has done well and it's kind of ripped higher, so it is trading a little bit of expensive here, but I do think it can continue to do well in 2022 and beyond. I understand that United Healthcare is not the most exciting stock that we've ever talked about on Fired Up Wealth. But here's the thing, guys. It's a winner, and winners keep winning. This has been in my portfolio. It's done really well. It's outperformed some of the technology stocks that I've held for the same period. I've had this one for several years. in my DGIF bucket. Some interesting stats I thought that I could bring to you guys. Revenue expected to grow 11.4% this year, another 10.5% next year. Earnings estimated 11.7% this year, 14.8% next year. Now listen to this though. Continue to compound at an annual rate of 14.35% for the next 5 years. This thing's probably going to outperform the market over the next 5-10 years when you think of the overall index. Wall Street analysts issued 17 strong buy ratings, 6 buy, 3 hold, and only 1 underperform rating on the stock. Individual investors following this stock, United Healthcare, on Motley Fool voted 3,419 to 167 that United Healthcare will outperform the market over the next several years. And then whatever this means, the more experienced investors voting 920 to 18 in the same result. So the bottom line here is that most people think that this stock is going to outperform the market for the next several years. Now, I do own this stock. It is very much in the Wall Street fashion show right now. It did come down and slightly broke this S1 area, and it's bounced off nicely from there. It looks like it's recovered. I would much rather buy this thing closer to 450 if it came down that level, but you might not get the opportunity just because people are paying a premium for this type of a stock, what they consider a value stock and a stock that's going to do well, paying that nice dividend and having growth in 2022 and beyond. Now, if you followed me for a while, guys, you know I've been pretty much a mega bull, a perma bull on Lam Research Corp. This thing's a large cap, $96 billion market cap, P ratio 23. This thing's firing on all cylinders. It's part of that new oil, the semiconductor equipment. 0.87% dividend yield. This does fit perfectly in all 5 categories for DGIF. This is my favorite DGIF stock on this list. And if you remember, I did a DGIF series back in 2020, and this is one of my top picks back then. It's done really well. It has run pretty hard, but I think this thing can continue to go higher. Some of the highlights on this, guys. So in 2021, they added over 3,000 new employees to ramp up production, and they were really agile when you think of how the supply chain was disrupted. These guys did really well and actually performed quite well considering the conditions. Now listen to this stat, guys. I think it's impressive. So in 2021, Lam Research increased manufacturing production and warehousing by over 50% to ramp up for what they think is going to be a nice little mega cycle on semiconductors. In fact, they opened new facilities in Malaysia as well as in Oregon. You can see on your screen here, Lam manufactured in Malaysia. Lam manufactures equipment used to make virtually every leading edge chip inside the electronic products you use every day. We talk about semiconductors being the new oil, you know, this microphone, this computer, TV, everything you use now has chips inside of it. You think of cars, it went from 0, chips and semiconductor equipment that goes into cars. You got sensors, cameras, things like that. Now, new cars, especially autonomous vehicles, you're talking about hundreds. We talked about John Deere earlier. Think of how many different semiconductors have to go into that for that thing to be completely autonomous. So this is going to be an ongoing mega cycle tailwind for semiconductors. Lam Research is a top stock when you think of semiconductor equipment, and I'm very bullish on this one long term. This video is part of a series, the DGIF series, Dividend Growth Investment for Fired. So definitely subscribe. There's gonna be more videos coming. These are 3 stocks I really like, but I've got several other ones I'm going to be bringing to you guys. Definitely subscribe so you don't miss the next video. Click that bell to get notifications. If this video helped you, please do me a favor in return. Drop me a like, drop me a comment. It helps out the algorithm. It helps support me as well. I appreciate it very much. I also encourage you guys to check out Patreon. Join us in Discord. I appreciate your time and attention. Hope you have a great rest of your day. Take care.